You don't need to know what we're talking about, Jamar. I know what we're talking about. Here with fan favorite, my personal manager. You know him. You probably love him. Jamar Hardy.
Hello, everybody.
This is your third or fourth time on my wildly popular Facebook Live series. This time, we are going to talk about the market shift that has happened recently. So, what would you say is generally the first question people ask you when you say you're in real estate?
It's kind of either a statement or the question kind of goes like, is the market still hot? Is it still booming and fast? And usually it's preceded by some story about something that's happening on their block with houses that sold for prices that people can't believe.
Yeah. And so, what do you usually tell those people?
Well, I never tell people that the market's not hot because we go through cycles in the market, and like we're in fall technically now, right? So yeah, it's a little slower, but for fall, if we compare a year over, we're busier, right? So it's hot for the fall. But it also depends on people's situations, price points, location. Obviously, drives real estate opportunities. So I guess the standard answer is it depends. It depends where you're at. And what segment of the market you're talking about. Very
true. Do you feel like today we are in as strong of a seller's market as we were, say, April?
No, so that's where the shift happens, right? The shift has happened. We're getting back more to the balanced market, right? Mm-hmm. We're getting back more to where buyers aren't out there losing out in 6 or 7 opportunities before they win that one, right? We're getting back to, I don't have to, when the house comes on the market, get in there within the first 24 hours to even have a chance to put an offer on there, right? Or, it's led to some crazy sight unseen offers, right? And maybe using different contingencies to back out once people have the kind of buyer remorse shock of, yes, we won, but we are winning something we probably really don't want, but we feel like we have to take it because there's not a lot of options. I feel like for buyers under certain price segments, or even above certain price segments, there's just more out there for them to choose from. So we're getting back to that balance of a property can be on the market for a week or two before it gets an offer, mm-hmm. right? Versus, again, and I heard some agents in our office talk about managing expectations for a seller to where if I don't get that offer within the first week, and for some areas 3 or 4 days, what's wrong with my property? It's never going to sell. I always go back to just the historical averages as far as days on market. Even during the busiest time in the spring, we're seeing natural days on market to be somewhere around that 40 to 50 days, right? Mm-hmm. But if people didn't get it sold in the first let's just say 14 to 16 days, they were freaking out.
So setting expectations, it's definitely not the market it was where you could just kind of throw anything on there and get it, which of course, has some effect on sales, but I think overall, yeah, it's a positive shift, right? We want balance. And when people talk about, well, when is the market going to crash again? What we saw leading up to the crash was just a completely unchecked growth of price. And we're kind of seeing that cooling down, but still great prices on houses.
Yeah, I think it always goes to that other part of that conversation is when's the next bubble. So maybe, a consumer may say crash. We trend more on the bubbles, when it comes to, just the cycles. And we're not seeing any indications that we're heading in that direction, right? Especially when you look at the balance of just the new construction opportunities that are coming to the market. New construction is trying to keep up with demand, and it might still take them 5 or 6 years before they catch up to the demand. So I just don't see that happening anytime soon. We shared at our recent Tuesday meeting, or at least our loan officer, Amy Loftus, shared that yes, rates have gone up. We're over 5 now, right? How long has it been since we've been kind of around there? And to me, that's an indicator.
7.5 years.
7.5 years. So
I don't normally prepare for these, but I did go and ask about rates right before we started this. 7.5 years.
So that becomes an indicator as well as far as coming back to the balanced market. But I think we've been talking about rates for the last 3, 4, 5 years. Like, when are they going to start upticking? I think they're talking about 2 more upticks for next year that they're planning as well. The
Three.
Fed's 3.
That's
Yeah.
what I just said.
So it's happening. I think that's going to level out the market in a very honest way as far as some buyers that maybe could have bought back in spring, even if they were overpaying. Now they're losing some buying power because rates are upticking a little bit, and maybe renting will still be a better option for them. So.
Yeah, but I think overall, it's healthy, and no one likes to see rates go up because you're paying more for the money you're borrowing. But it is a sign that our economy is healthy, and we don't need to give away money to encourage people to borrow it. So I think overall it's positive, and certainly for that first-time home buyer segment that's had it really hard this year, it's becoming a little bit easier to get into houses. But yeah, what would you say to someone if they wanted to list their house today?
It's about, you still have to kind of, stick with the things that matter the most, right? So making sure that you are in those, I call them the 3 lanes, right? You're pricing it right. The condition of the property is right too. And then that last lane that I think is kind of a floating lane, if you, in a weird way, is, what's your expectations on selling? What do you need out of your house, right? Like, what's your next step from here as far as, are you moving up, or are you an empty nester and you're downsizing? I mean, that all plays to just positioning yourself appropriate in the market that you're currently in. To your point in the beginning, and in the spring, maybe that conversation is a little bit different because we had so many buyers, rates are still low. We're just throwing stuff on kind of as is, but that condition and being show ready, I think, is always important across all segments. I'm hearing more conversations from agents now about, hey, people called me, maybe they got the message late that it was a hot market in the spring, or they weren't ready to go in the spring. Now they want to take a look at maybe selling in the fall. Well, it's our job to tell people the information that we know and maybe they don't know. So maybe fall is not a good time. Maybe for your particular property, we could stage your property, take some pictures, talk to you about decluttering, just get in a good condition so when you come to the market, you look your best so you can garner that top dollar, versus just throwing it on, selling it as is, and hoping you're going to get somebody to emotionally connect with something that they can't visually see them fitting into, right? So it's about painting that picture for the buyer coming through and making sure that you look the best when you come to the market.
Yeah, I think, obviously motivation is huge. There are some people that are they have to move. They, a family member died, they have to get rid of the house. There's things that, there's reasons why people sell into the fall and winter. But I think there are some agents that are spring list in the spring. I think there are compelling reasons to list now. And I think that if someone were to list, now's the time. I think that this is going to be the last push we see before the holidays.
Yeah, with that too, I feel like maybe we are going to be steadier. I'm not going to say busier, right? Steadier longer than we normally see in the fall. So to your point, holidays becomes a distraction. The next natural distraction that's coming up is going to be Thanksgiving, probably, right? Or for us, we're trying to plan for our holiday event, the Pumpkin Fest here, and we had to figure out, should we do it over MEA or not? I mean, there's some of those things that happen for people where they're making decisions and they're not out there shopping because they're doing family stuff. But I think if you got a house on the market in the winter into fall, it's an indication that you have to sell. And if you're out there shopping, it's an indication that you have to buy. So, we're talking to agents about getting in open houses now because there are some real true quality, right? Buyers and sellers testing the market out and walking through some of those opens. So I think, you don't have as many tire kickers. I think it's more of an indication of people that really have to do something. And I think to a certain extent, doing it before the end of the year becomes a motivation for certain people too, depending on if they got to get some stuff off their books, if they have some plans for 2019 when it comes to their money, tax purposes wise too. So you just never know the person's story until you kind of engage them, for a transaction. But I think it's going to be a steady market through the fall and winter. I think there's still going to be houses coming on at a steady rate. I don't think we're going to see as much of a frigid pause as we normally see. Obviously weather dependent. And it helps that the Vikings are losing too, because At some point, people just, instead of sitting in front of the TV on a Sunday, they might actually go take a look at some houses and say, I'll catch the highlights later.
Well, this Sunday, no game.
No game this Sunday, yeah, so people
Good
will be out
time to
shopping.
be out. Price reductions. So I'm hearing it from agents, I'm hearing it from managers across pretty much all segments. We're seeing price drops. So do you think that that just speaks to people putting on a house sort of in that spring mindset of like, here's the price we can get, and then sort of meeting reality of, no, it's not the same market anymore?
Yeah, so I don't want to say I point blame at all parties, but I kind of do, right? So we've been talking in our office about setting the proper expectations, especially if somebody engages you now about putting their house on the market off of old information that they remember hearing in spring, right? I'm not going to tell somebody that, again, going back to the condition, that we can go on the market in as is condition and get some people to throw offers at it based on emotions. I have to really tell them that here are the average days on market, and can you afford to be on the market for 2 months if need be? Again, not a bad market time for statistics, especially if you look year over, but can you afford to? And within that 60 days, what are we going to do to refresh the property, right? Sometimes it can come from the marketing standpoint, but the first showing always happens online, right? So, people are really walking through houses on that second showing in a weird way. And if we don't pass the smell test, are we willing to say we're not necessarily the best on the market? Maybe we're in the middle, right? Maybe we're the good, maybe we need some work to the property as well. I just think you have to, temper those expectations and let people know more on the caution side of, we could be here for a little while versus, when we get all these offers within the first, 24 to 48 hours, we have to be ready to make an informed decision. I mean, it's a different market right now. It's shifted, so you have to kind of talk about the law of averages a little bit more. So
it's not fun to ask people for a price adjustment. Backed by popular demand, of course, Brandon. People have been clamoring. My phone does not stop ringing for this. It's hard to ask for a price reduction. And, to a certain extent, as an agent, you have to kind of, say, hey, I was wrong, because you agreed to put it on at that price. Whether or not the sellers pushed for it, So it's best, obviously, to price from the beginning, but just having those conversations with people about, this is where we're at now, which can be difficult when you're pulling comps from, we pulled, exactly, like 60 days ago, it just not the same as it is now. So I think that the other part we haven't really talked about, to put in a plug for realtors, is, you have the 3 lanes, as you said. What piece does kind of the legwork and the marketing on your realtor's end play in this?
I mean, to me, it's probably the most vital part. I mean, that's why, a seller would hire us, even on the buy side, right? That's why consumers hire us, because we have access to information that, I'm sorry, some of our national sites aren't necessarily provided. Or if they are, it's a real loose-based information. It's not the detail to our local market. So it plays a huge role into how something is going to be presented to the market when it comes to the market, how something is even going to exit the market. So going back to even price reductions, right? The price reduction conversation should start at time of the listing appointment. It doesn't start once we realize that we've been on the market for 30 days and nothing's happened. We should really talk about, hey, if we don't get something in the first 2 weeks, are we looking at that 3 to 5% drop? Do we have the concessions or the contingencies built in for that type of drop? Because here's the deal: if realistically I know that the market has shifted and I see a 60-day average of things sitting on the market a little bit longer, even by, let's just say 10 or 15%, I got to deliver that message to a seller in a way. Can we afford to, incrementally drop the price, or do we come on at our, bargain basement price right away and test the market? And if we don't get what we want within that 30 to 60 days, pull it off for the holiday. come back in the spring where maybe we have more buyers' attention. So so that lane, that's probably the pricing piece is just so important for the realtor to come in with that full marketing plan laid out, including when should we drop the price if we don't get what we want, and having that honest conversation about any type of contingencies that a seller may have to make something happen. And and to that too, depending on if you're dealing with a move up or even a empty nester that's moving down, how do you quantify the other opportunity, of purchasing or acquiring if you truly don't know what your bottom line is, right? Yeah, I can hope to get 10 to 20 grand over asking because it's a spring market and really hot. But if I don't get that, do I have enough money to be left over to move up into my next opportunity? Or do I want to sit on the bench for a while and rent? I mean, not that I'm a huge proponent of that, but all those things have to be discussed and factored in before you come to the market.
Yeah, and if you're going to, the discussion about, it's tempting to look at price and say, this is how much I'm paying for a property. But if you are financing that property, that's not how much you're paying for the property. How much you're paying for the property is dependent on the interest rate you're getting that at. So if you buy a house for $300 today, you're not paying the same amount as what it's going to be next year with our 3 rate hikes.
Right.
So, do you take a $15,000 hit on price today to move on to save that 15, maybe more, depending on the loan amount and how much interest rates go up?
Yeah, and so to your point, it shifts all across the board, right? Rates go up, guess what? Prices don't necessarily rise at a rapid rate when that happens because guess what? You're losing some of your buyer pool based on what they can afford. So everything kind of levels out based on the opportunity out there when it comes to the rate hike. But again, I think it's a very real, so I go back to, you make your money on your acquisition. You don't necessarily make the money on the sell. The money you make on the sell is the either sweat equity or the equity you build based on the market. And historically, 3% is about average, right? So even if I run that 3% factor over a 5 to 10 year base, it's not like it's a ton of money, right? That's when the sweat equity piece kind of comes into money in equaling money out when I sell, right? You want to create that equity spread on, be aggressive on your payments. So that's where you kind of get into, and again, we're not loan officers, so we're just talking, right? We get into the 15-year products versus the 30-year products, the ARM products, which we learned about that are better right now and a heck of a lot more competitive. And people are afraid of ARM because they feel like that's what got people in trouble last time. That's false. What got people in trouble last time was straw buyers, people that were buying homes that they couldn't afford. People owning 2 or 3 properties and they were going off of stated income. That's what kind of got us in trouble, not necessarily being able to really say this is my sole homestead property and buying within their means, right? So I don't know, there's just so much to kind of factor in, and it kind of goes back to hiring the right person to make sure that they're looking at all that stuff instead of just looking at what your neighbors are doing down the block and assuming that they can apply it to your situation because you don't know their situation. Trust me, there's nobody coming out their front door saying, I got 70 grand in equity, I can take 30 grand less off my list price, bring me an offer. Like, nobody's shouting that out there, right? So, yeah.
I've looked up many sales of people's neighbors' houses because they were like, oh, they said it sold for blah, 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 let me see, and we look it up, and you'd be surprised how many times, well, guess what? That just isn't true. And that person
Right.
just didn't tell the truth about
Right.
how, the offers they got. So yeah, I think, and not just realtors, I mean, you were talking about that ARM product. Our loan officer here, Amy, brought this really interesting adjustable rate mortgage ARM that had a 15-year lock. And so for 15 years, that rate is locked, which for most people is, either they're going to pay off their mortgage early in 15 years, they're going to move, they're going to refi. So, and the interest rates were great. And so just like, not every loan officer is going to do that for you. Some are just going to say like, here's your 30-year conventional, here's your 15-year conventional. They're not necessarily looking for these unique opportunities that might be financially or otherwise more advantageous.
And in a weird way, I think, again, as realtors, we don't we know about financing, but we don't qualify. We're not looking deep into somebody's personal financial situation. We're kind of waiting for that approval letter from the mortgage expert, right, on what their clients, our clients, right, and them sat down and talked about which would be the best price range to purchase in, right? So that's all consumer driven. But with that being said, everybody's situation is different. So to say I have a one size fit all program, it's kind of, and I know there's loan officers out there that want to do the easiest, right, thing, the easiest file. That's why a lot of them don't necessarily push first-time home buyer products in front of people. Like if you don't need it, don't use it. I agree 100%. But at the end of the day, you could use down payment assistance to really leverage yourself into more buying power, but also put yourself in a situation where that cash that you have, you know, sitting in your account, depending on what you have to keep in reserves to qualify for the program, could be used to, you know, buy furniture coming through the door. Maybe it's a contingency if you want to do a little work to the property coming in. My sister, you know, she had a great experience with Amy and bought her first house. You know, now we're using the MHFA fix-up fund, not to put her stuff out in the streets, but it's a sizable.
She did.
Well, no, it's a sizable loan for her to actually get as a second, and she used down payment assistance too, but a sizable loan for her to get as a second to go in, and my contractor's helping to make the place really hers, you know?
The fix-up money is so underutilized. If you guys don't know, Minnesota Housing, they do down payment assistance. They also do fix-up loans. The rates are a lot better than a lot of secondary mortgages you would get for stuff like that. If you're doing energy efficient upgrades, they're even better, and you can do the work yourself. It doesn't have to be a contractor. You can get a fix-up loan for work that you've already done to pay yourself back.
Yep.
Super flexible, different repayment periods depending on what you do. And I don't think a lot of people are even considering it when they're thinking about how am I going to pay for these repairs, upgrades, etc.
Well, yeah, and the one that I'm familiar with the statewide one, is, you know, my sister's locked in for 20 years to pay off the work she's doing now that she's going to enjoy over the 20 years, right? And it really only increased her payment, you know, the money that she's getting by an extra $100. So when she saw that, she was like, "Oh, really?" Now again, you can't do appliances and stuff on there, but for her, you know, the new flooring, right, to the new countertops she's getting, even down to getting new toilets in her bathrooms, and just so much stuff. They're adding a gas line so she can have a gas stove versus an electric that was already put in. Like all that stuff, right, we're able to do prior to her moving in, and she gets kind of a brand new house for an extra $100 a month, which she thought was an amazing opportunity for her.
Yeah.
So.
It is. People don't take advantage, and people always want to know about rehab loans, and not that there's not a time and place, but man, it's a hassle. And to get a seller to accept that, especially in a competitive market, is a whole other thing. So just thinking about having that in your back pocket, which, I mean, you know, we're biased because we know about it, we use it, but like, how many realtors do you think have no clue what the Minnesota Housing Fix-Up Loan is?
Yeah, and kind of going back, I think we talked about that ARM product that Amy was speaking about. I think it's something that investors can use as well. So I guess the lane I'm trying to go back to is like, there's these exotic products that are coming back to the market. Again, I don't think it's a one size fits all, but to your point, really kind of pushing your mortgage consultant to say, okay, here's what I'm looking to do, what's out there for me, how can I use this, and how can I look at the scope of, I'm only going to be here for 5 to 10 years, so is there a safe product out there for me to get to where I don't see my payment jump way up like in an ARM product, but how can I leverage that? I was talking to a gentleman today who I know who, you know, reached out to me through LinkedIn and just said, hey, I'm thinking about purchasing, but I want to purchase a duplex. Obviously, owner occupy it and then have the other person help pay. And we all know, like, the duplex market is really hot. It goes on, I mean, it goes quick, and people see the acquiring investment properties. It's been few and far between just because all of the intermediated stuff kind of went away. But as we were talking, he's a vet. So he gets the VA loan, and just some interesting stories came out as far as, you know, another vet did this and then loaned money to this other guy, and now he's on his third property. And just the way people are collaborating on getting into the game, there's so many different ways to get into the game. And if you do it right, pardon me, you can really, I don't know, I just saw the white truck out there. It's kind of similar. If you do it right, you can build a nice little nest egg. I mean, that's for us, believe it or not, most real estate agents, their 401k plan is investment properties.
Yeah. For
You
sure.
know, they're not employees or
Oh, I
independents.
think Tim was on and he just left. He was done watching us.
Yeah, I think I said white, and then he just said, I'm
Yeah,
done
he
with
was.
this.
I'm done. This is over.
Oh, man.
Yeah, I feel like we moved from the shift, but there's always so many interesting topics to talk about. But I mean, I think the reality is, the bottom line, temper your expectations in the seller's market. But on the flip side, like, it's a lot better out there for buyers. And I'd say if you are a buyer and you're willing to move in the winter,
Oh,
you're
great.
not gonna have the selection necessarily that you would in the spring, but like the prices, the competition, it's gonna be a lot better. And a lot of first time buyers, you don't have kids, you're not necessarily tethered to that seasonal school schedule. Hire movers with the money you saved so you don't have to move in the winter.
You know, and kind of to the whole, so I would always tell people, and this is across any market shift, so bringing it back there, you know, in the fall, winter, you know, you buy like, you know, between now and the end of the year, or even January, February, it's almost kind of like buying that, you know, 2019 or 2018, pardon me, when the 2019 is coming a lot. I think there is a natural discount in a weird way because you have less attention and the hold times are so much longer. You know, it's funny because there was a time when there was so much inventory that people were naturally coming in lowballing or coming 10, 15 grand off a certain price segment, or always 5% off or they offer it. We've shifted to where obviously sellers has the advantage, but again, with this market shift, I think more sellers are working with buyers, right? So you come in, you maybe give them what they ask for, but if there are some challenges through inspections, I think more sellers are like, instead of starting all over again, right? We'll concede to maybe dropping the price a little bit, or we'll concede to fixing a few things too. So that's where we feel the buyer getting a little bit more back into the game and things being a little bit more balanced. So.
Yeah, I think so. I think all of our viewers have left. So
It's just you and I.
Yeah, it's probably just it's time to sign off. Anything else you feel we have not adequately covered?
Besides, you know, you officially like the podcast, like you need to start your podcast. And I told you I would love to be a regular guest, kind of like I am here. Not that I don't like seeing myself on camera, but I think we can go somewhere with this podcast, Erica.
Perhaps. I don't know. I just feel like the idea needs to come first. It needs to be a solid idea. There's a lot of podcasts. There's a lot out there.
But there's not a lot of podcasts with you and I on it. That's all I'm saying.
It's true. It
Yeah.
would be the only one.
Yeah.
Unless someone else wants to invite us onto their podcast, which I'm also open to.
Yeah, absolutely.
But yeah, I mean, you're a perpetually great guest. How much do we prepare for these interviews?
We don't. We wing it.
No, we do not prepare. Hopefully it doesn't show.
No, I think I asked you, what's the topic about again? And you're like, don't worry about that. So
Yeah.
I don't never worry about
I don't usually prepare. Sometimes people ask that I send them questions. But, you know.
You get a more natural response. At least I feel like you get a more natural response from somebody if you don't. Like, Cherry, like, just throwing them questions. Like, because you can overthink it to a certain extent on your response. So,
Yeah.
Yeah.
Natural. It's better. And everyone's all done. Oh, did someone join us?
And
No, they went
off,
away.
yeah.
They went away.
It's
Okay.
definitely time for us to go.
It's definitely time. Okay, so as always, if you need me, you can shoot me a message or phone number 612-729-7239.
I'm getting
Jamar's
animated
take
because-
on the post.
Yeah, I'm getting animated because you should be plugging your upcoming event.
My pumpkin event.
That's one.
Oh. No, my first time homebuyer event. Yes, of course, you're right. If you have made it to the end of this video somehow, I am having a first time homebuyer event next weekend on Saturday from, I believe we decided on 9:30 to 10:30 here at the 53rd Lindell Edina Realty office, totally free. It's going to be everything you need to know about buying your first house. Really casual. Amy's a great resource, as we mentioned earlier, and just walking you through what the process might look like and maybe addressing any specific questions you might have. So if not only you would like to attend, but if you know someone who is looking for something like that, pass along my name. Jamar's tagged on this, so for some weird reason you would need to talk to him. You want to become a real estate agent?
Yes, I'm looking for great agents out there.
Yeah,
So
great agents.
actually, we just onboarded one today.
I know.
So,
I think she's going to be great.
It's going to be great.
So until next time, and of course there will be next time. Maybe not in 2018 though. We might have saturated the market.
Yeah,
Yeah. Okay.